All right, before I get to the good stuff, I have to get to the disclaimers. The results here are provided for general information purposes as a convenience to you, the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. I will go a step further because I should. This is not a solicitation to buy or sell any security ever. In fact, this is not advice. Past performance is not necessarily indicative of future results. And since this is a webinar that will discuss options, you should read the characteristics and risks of standardized options available on the OCC website. Okay, friends, I promised to deliver a lot of information in a short period of time, as concisely and clearly as I can. I hope that that means you'll find it valuable. I can't promise that, but I sure do hope that. This is the agenda. I know it looks long. It isn't. I'm going to start this video off. I'm going to start this webinar off with a 5-minute and 40-second video, which most of you may have already seen, but some of you may not have seen. So before I do that, I'm going to open up chat and I'm going to say to the first 10 people that answer, since that video will be the backbone of what I will be talking about, and even though it seems like a fun 5-minute, 40-second video for no reason, it actually has every meaningful part of the webinar inside of it. So, on the count of 10, or 3, if you want to see the video, push Y, and if you don't, say no. Ready? Who wants to see the video? Okay, you guys can stop. You guys can stop. You guys can stop. It was 37-0. Okay, you got it. 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 You're just one of my favorite crowds ever. Oh God, if you guys saw my little thing, 37-0. Okay. So here is a screen that I'm going to share. It's just a 5-minute, 40-second video, 5 minutes, 45 seconds. I don't mean to misrepresent. Can you guys see the screen? So, yeah, okay, great. I'm going to play 3 seconds. And if you can hear it, I just want to have a bunch of Y's, a bunch of yeses. Ready? Did you hear that? Okay. This is the most boisterous group of people I've done a webinar for in many, many years. All right, guys, I'm going to mute myself so you can hear the 5-minute, 40-second video. Trust me, it's not just so I can hear my voice. I hate the sound of my voice. But this video embedded in it is exactly what I'm going to show you, but with great clarity and why it matters to you. Ready? I am muting and I will push play.
If you trade stocks or options, you already know this. Most of what you see is noise, and it's hard to know when the odds are actually tilted in your favor. You've also probably noticed there's a new edge or a new algo or a new product with a new AI signal launching almost every week, usually with more marketing than math and very little rigor you can actually see. I'm Ophir Gottlieb, the co-founder and CEO of Capital Market Laboratories. My background is in financial mathematics and AI, trained at Stanford University, and my career has centered on building quantitative models that translate vast amounts of noisy, often contradictory data into usable signal, into probability. My work has powered research used by institutions with over $1 trillion in assets under management. In 2019, I was invited to speak at the CFA Institute's annual conference in London on the topic of disruption, where I discussed the future of markets in the era of algorithmic and AI-driven decision-making. The research I was asked to present was the application of AI and forensic accounting to equity return modeling. And that research was published in a peer-reviewed academic journal and is available on SSRN as one of the early demonstrations that machine learning and deep learning can detect structural financial signals in markets that look chaotic on the surface. In this short video, I'm going to show you something different. A system where every part of the process, from the data, to the model, to the results, is grounded in measurable probability, not promises. I want to start by introducing a simple idea. Markets are noisy by design. They're full of randomness, emotion, and reflexive behavior. The goal is to find some signal that's strong enough to cut through some of the noise, so that over many observations, the model's decisions tilt outcomes slightly, but consistently in your favor. We need a repeatable edge, a consistent bias toward being right. Because when you have that, and you apply it over and over again, it compounds. To find this edge, we train the system on a very wide range of data. Technical price behavior, volatility structures, macro context, and time-lagged relationships that capture how information actually diffuses through the markets, rather than all at once. You can think of it like heat spreading from a source in a room. The heater turns on in one corner, but the whole room doesn't instantly become 72 degrees. Some areas warm faster, some slower, currents form, and pockets of cold air stay put longer than you might expect. Market information behaves the same way, and any model that pretends it arrives everywhere at once is convenient, and it sure sounds good in an advertisement, but it's wrong. That's very different from the one indicator or clean signals people often tout, which usually only work in hindsight or in a narrow backtest, if at all. Our model features are built to capture both the heat at the source and the way it diffuses, not just what happened, but how quickly, how far, and with what follow-through. The model doesn't rely on one indicator or one theory. It integrates hundreds of features, each a small piece of truth, then tests statistically whether those pieces in combination and individually create a measurable advantage. That's how we move beyond intuition and into quantifiable probability. We let the data tell its own story, and we listen with enough structure and discipline and experience that we can measure whether that story is actually real. What makes this moment different is the structure of the market itself. 10 or 15 years ago, much of this analysis wouldn't have mattered in the same way. The data wasn't as rich, the compute wasn't as cheap, and market participants weren't as synchronized. Today, institutional algorithms and retail traders are all watching the same economic releases, the same intraday moves, the same flows, and reacting sometimes in seconds. That creates feedback loops. And those feedback loops create patterns. They're small, they're transient, but they're statistically detectable if you look at them in the right way and at the right scale. Our technology is built to find those patterns, to quantify them, and transform what used to look like pure market noise into a usable, measurable signal. This is what modern market modeling looks like, not predicting the future with certainty, but measuring the odds more accurately than before. Higher win rates and larger average returns. And the signal is clear, not noise. That's what this system does. It converts messy, high-dimensional market behavior into a clear, probabilistic view of tomorrow. A repeatable edge you can actually use. And that's what makes it a genuine breakthrough in applied market intelligence. Thanks for listening.
Okay. That is the first bullet point on the agenda. I told you the agenda was going to go quickly. All right. One thing I realized when I was making this webinar was that while I have some things to say, I think the most important thing I have to say is why you should care, or why you shouldn't care. And why is that? First of all, because you shouldn't listen to anything from anyone on any subject if it doesn't matter to you. And secondly, if you're here on your Saturday and you're like, I'm going to give this a shot, if you don't like what I have to say in the second bullet point of the agenda, enjoy your Saturday. Go love yourself. Go love your family. Go have fun. Go watch football. Okay? So here we go. So why do you care? And tell it to me like I'm 12 years old. I did not tell it to you like you were 12 years old last time. That was my fault. Okay. This is a reminder. On November 18th, 2023, several hundred to thousands of you were on a webinar with me, and many of you are here now. And I did something with 4 strategies. Okay. I introduced one flavor of AI. That flavor of AI, if we want to be specific for you measure theorists out there, like me, it's called return distribution characteristics. Okay, that's just some jargon. What it means is it looked at a type, at, at two actually, two types of way to describe the characteristics of a stock return. It would be the equivalent of saying that would be the equivalent of saying I built a really comfortable bench for six friends to sit on them, six friends to sit together on a bench, versus what I'm going to show you today, which would be more like I built Wembley Stadium, that seats 130,000 people. Both types of AI. Now, let's talk about that type of AI before I talk about the new type of AI. I shared 140 alerts on that webinar. And that webinar is freely available to anyone in the world. Trade Machine member, not Trade Machine member. You can poke holes in it. You can see that it's true. You can't fake it on YouTube. You can't backdate stuff on YouTube. It's real. And I said then on that webinar that I'm not sure that you have to do anything else in Trade Machine other than share these 140 alerts. I said you can, and many of you will, but I'm not sure you have to. It's now been 2 years. In fairness, it's been more than 2 years, but when I made this webinar, the numbers I'm going to give you are from December 8th, 2025. So 2 years and 20 days. It took me about a month to make this webinar. So just in case you start doing back tests in Trade Machine, you wonder why they look a little different. This is through December 8th, 2025. So 2 years and 20 days, over 2 years. And we can see how that AI has done. The 140 alerts that I specifically chose for you guys, specifically sent them out. And here you go. It was 4 trades, 4 types of trades, 81% win rate, 32% average return. But I didn't stop there. Then on March 20th, 2024, so 3 months later, I did it again. So these are the results I just showed you from 2 years and 20 days ago, over the last 2 years and 20 days in like real time. No, can't mess with the alerts once I put them out there. These are from like 19 months ago. You look at the bottom, look how similar the win rates are, right? It's because I was following a very specific type of AI, which looked at return distribution characteristics and certain types of trades. We should see them work about the same. I just want to point out that on the right-hand side, these were not ETFs. These were the components of the ETF. So it wasn't the XLF, it was it was the S&P financial sector. And this is the S&P energy sector, the S&P health and sciences sector, the NASDAQ 100 components, okay, not the actual ETFs. That's important because I'm going to be doing some ETF work with you today and individual stocks. Okay, so now a little bit of hard truth. First good, then bad. Okay. All right. For many power users, and you guys are probably here, Trade Machine has been a game changer, right? Those are your words. It's your words that it has turned your option trading into something profitable and repeatable, and it's a product that you could never live without. The reason we ask our members who feel that way to post on Facebook is not just because we like social media coverage. It's because when someone posts on social media, you can click on it and you can see them. And for most people who don't have private profiles, you can see like, oh, it's a father, it's a mother, it's a brother, it's a sister. They have a party. There's a birthday party. They're at the ballpark. You can see they're real people. It's not us. Okay. That wasn't a hard truth. That was an easy truth. Here's the hard truth. For others, Trade Machine feels like there's a lot to learn, which there is. It feels like it's hard to know where to start, which it is. And it's hard to know how to decide between the hundreds of possibilities. So I think Trade Machine for some group of people, definitely some on this webinar, kind of feels like too much stuff. And it's a shame that it feels like too much stuff for some people because that's my failure. And the reason it's my failure is because the intention of Trade Machine was the opposite of being too much stuff. I was like, oh, let me make this easier, right? We got together as a company. Jason is the architect. And we're like, how do we make this easier? I got Mandy running support, and she's telling me what customers are saying. And so that's what I'm going to do here today. But I'm not just here to make it easier. I'm here to make it better. Remember, I told you the AI that these results are based on the right-hand side of the screen, which you can see they have happened in real time after I posted them. Over 2 years of data. Those were the win rates and returns. I said it was a very particular type of AI. It's called return distribution characteristics. It's like building a beautiful park bench for six friends. What I've built for you today is Wembley Stadium. Invite 130,000 of your favorite friends. What I'm going to show you today, which will be separate from Trade Machine if you want it to be, or it can just be in Trade Machine. It's up to you. You can have just what I'm going to show you and not pay for Trade Machine if you don't want to. It's easier, it's faster, it's better, and it's less expensive. Okay, the whole point I'm trying to make right now, before I actually get into math and returns and trading, is this, because I want you to own your Saturday if you don't want to hear this. If we just blew out Trade Machine 2 years ago on November 18th, 2023, and deleted all the functionality, I think there's a good, and only posted these four trades, I think there's a good possibility everybody would have made more money. Now, there's definitely people who would not have because they are Trade Machine experts and they're doing their own shtick. But I think most people on this webinar don't have 81% win rate over the last 2 years and an average trade of 32%. It's my guess. So today we are going to introduce a sort of super duper powered version of this. And this is what I mean by that. It's much easier now. So why is it easier? It's a single tab. Why is it faster? Because you only have to choose from 5 strategies. Why is it better? Because the new neural network, this new AI, which you saw the video on, and I will discuss, is incredibly powerful. It's Wembley Stadium. It's not a bench for 6 friends. And if you only want that tab, it's called OptionSignal, trademark pending. It lives inside Trade Machine. If you only want that, whether you're a current Trade Machine member or not a member at all, if you only want it, it's less expensive. Just to be clear, using all of Trade Machine is my preference. I will show you why. And it will be for many of you. But for many of you, it won't be. Maybe you'll say, no, 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 no. I want the easier, faster, better, and less expensive part. It was too complicated before. And why do I say better with Trade Machine before I get to the real returns? Remember, this is how we did. This is how we've done over the last 2 years on that webinar I sent out. I just applied that AI to those same trades, and that's what happened. Went from an 81% win rate to 85% win rate. The average trade. Remember, I said you have to have a portfolio of trades because not everything's going to work. Went from 16 wins, 17 losses, and a 6% average return loss to 7 wins, 1 loss, a 35% average win, and an 87.5% win rate. Now, this is not the presentation. I'm just showing you, even applying it to the AI I sent out, which did very well for everybody. Even if I apply it to that, which is a really difficult bar to hurdle, it did better. So we're going to do it again with AI. But that's the whole point of this. Blah, 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 new AI. It's this. Almost everyone would have had made more money if we made Trade Machine easier, faster, better. So today we introduce a sort of super duper powered version of that. Here we go. This is what it looks like. This is what OptionSignal looks like. Okay. If you look closely, there's just a new tab. You might not see it yet because you didn't buy it yet. OptionSignal right here. It's going to look something like this. It's easier because it's one tab. If you want, you don't have to have any of the other tabs. You can just have this one screen. It's faster because you can choose from 5 strategies. I know it shows 4 strategies there. There's a 5th strategy below it, and I wanted this to fit on a screen. So just work with me. It's better because this new neural network, this AI, is incredibly powerful. I'll explain what you're seeing on the screen right now. Don't worry about it. These are it's just an image for you to see that it's all in one tab. I will explain it. It's very, very easy. And it's less expensive. If you cross out all the other tabs, If you like, you can purchase just this new option signal tab, which lives inside a trade machine. Right there. That's where it lives. Okay, before I tell you what it is and why it matters, how to use it. This is the best part. Remember I said easier? Here you go. At 3:45 p.m., that's 15 minutes before the close, the model will give you a result. It's a number between 1 and 5, a whole number. It won't be like 1.3. It's 1, 2, 3, 4, or 5. Okay? It doesn't matter what the model predicts at the end. This is how we're delivering it to you. When it's a 5, it's a bullish trades trigger. Okay? When it's a 1, bearish trades trigger. But it's extremely powerful AI, so we have to add a little to that. When it's a 5, bullish trades trigger and bearish trades close, it's a double signal. Bullish trades open, bearish trades close. Alternatively, when it's a 1, it's a very strong signal. When bearish trades trigger, then your bullish trades close. So you will never have, using option signal, a bullish trade on with a bearish trade on, and you're looking at your portfolio of options and you're like, so am I rooting for the market to go up or down? How often does this happen? On average, a 1 and a 5 occur about 20% of the time each. It's a uniform distribution. A 1 happens as often as a 2, happens as often as a 3, happens as often as a 4, happens as often as a 5. So on average, 40% of the days in a week, 2 or 3 days a week, there will be a trigger. But that's on average. This is the reality of it. For those of you that were so kind to have listened to me over all these years to try to help you trading, when I was talking about something called a Hawkes process, which is a fancy way for mathematicians to say a process which is self-affecting, which is a fancy way of saying clustering, which is a fancy way of saying contagion. Okay, this is what I mean by a cluster. On any day of the week, the chance of a rubber company going bankrupt is 1 in 500. Just a company that makes rubber. So 1 in 500. But let's say tomorrow, one of the companies that assembles tires went bankrupt. The odds of the rubber company that supplies that company now go up, right? It's self-affecting. When one thing happens, the odds of it happening again go higher. And then if that happens, then the odds of the companies that make the machines that put the rubber on the tires going bankrupt goes up. It's called self-affection. In finance, we call it a contagion. That's what a credit contagion is. It turns out this math was most formally introduced by the Japanese to describe earthquakes. When an earthquake comes, the odds of an earthquake are low, but once an earthquake comes, the likelihood of another one goes up, and it goes up again, and it goes up again, and it goes up again. And it's called self-excitement. Because of that, you get clusters. So while I tell you on average, 20% of the days are 1s, 20% of the days are 5s. So on a 5-day week, on average, you get 1 5 and 1 1. I'm telling you it clusters. That means on some weeks you might get 3 5s and 2 2s. And on some weeks you might get nothing. So if you buy OptionSignal, the tab, just remember there will be some weeks where you're like, okay, nothing's happening. It's fine. That's normal. That's how it's supposed to work. It clusters. Nothing's broken. It clusters, or it's a contagion, or it's a Hawkes process, however you want to go. Now, I want to be a little clearer. It sounds like I'm telling you there's only 15 minutes for this product. Not exactly. So it's true that the model will give you a result between 1 and 5 at 3:45 p.m. Eastern, but a lot more is happening. All day, we're going to give you odds to prepare for. Okay? See this? That's the probability of a 5, a 4, 3. This changes in real time. I don't recommend you stare at it all day. You're just going to drive yourself crazy. It's like staring at a stock price all day. But if you wanted to, you could. Then something very specific happens at 3:30, so 30 minutes before the close. Or if you're an SPY trader, it's actually 45 minutes before the close, right? You can trade SPY up to 4:15. At 3:30, we're going to give you the odds based exactly on an SPY price. So it'll look like this. It'll go away from that random thing and be like, okay, SPY is this dotted line. Or sorry, yeah, dotted line. If it goes up, it's going to be a 2 today, right? If it goes down in this price, it's going to be a 5. So with a half an hour to go in the day, you're going to have a pretty good idea of whether it's going to be a 5 or a 1. Okay. I will also, for those of you who haven't traded SPY before, you can trade it up to 15 minutes after the close. Those are totally normal working hours. So, and a lot of these trades are SPY trades. Okay. So that's how it's going to look. I'm just going to take this section, cut it out, and then blow it up for you so you can see what it looks like. It'll look like that after 3:30. At 3:30, we give the odds to prepare based on the SPY. Before then, we're going to give you the odds in general. It's very hard. There's a lot of Monte Carlo simulations going behind the scenes. At 3:30, we freeze it, and it's only based on the SPY. Okay? So this is what it will look like during the day in real time. This is what it will look like at 3:30. Friends, we just did the first two bullet points, and they were the two longest bullet points. I cannot do a trading webinar, as you guys know, without trying to help you be a better trader, even if you don't buy something from me. Sorry, it just is me. I want to talk to you about if you have not had success, there's a chance it's mistakes here that explain your performance. And today is meant to address that. And I don't mean buy this and you'll be successful. I'm talking not about this. Some of you have seen this like 11 times, and I do apologize. But repetitio est mater studiorum. Repetition is the mother of studies. I'll go faster than I normally do. You've heard me say that for a successful trading career, I mean the long arc of a career, friends. I don't mean next week. I don't mean when Trump announces tariffs or doesn't. I don't mean this month. I don't mean this year. I don't even mean the next 3 years. I mean for the rest of your life as you are a trader, to either supplement your income or to become your income and financially free. I'm talking about the long arc of a career. This is not about Thursday. I believe that option traders need a portfolio of trades. I would say I'm sure of it, but I can't say things like I'm sure in finance. It's not allowed. And probably shouldn't say it. But I do have my First Amendment right to freedom of speech. So in my opinion, I'm sure you can't be a successful option trader without a portfolio of trades. But that's my opinion. You need to be long volatility. Doesn't matter if you know what that means. It means you own options. You need to be short volatility. Doesn't matter what that means. It means you're doing things for a credit. You need it for a bull market. You need it for a bear market. I have some really good news for you guys. We've never really done the bear market thing very well, which has meant Trade Machine has been exceptionally good at one side and not so good at the other. The bear market side is as good or better than the bull market side now. And that's because the first AI looked at return distribution characteristics. It's a really beautiful bench for 6 friends. This AI is Wembley Stadium. In less than 20 minutes, you'll have all of this. This is what OptionSignal does. All of this in that nice little page. But now is when I make an ask of you, and it's not for money or to buy something. Remember, this isn't about selling a product. Since I will be sharing an actual portfolio of new alerts, those a portfolio which 2 years ago would have made you a ton of money, which 18 months ago, 19 months ago would have made a ton of money. That's my job. You also have a job, and your job is this. Ready? I hear a lot of people say they want to do something. I want to go to the gym. I want to be an actor. I want to be a trader. But what they really mean is that they like the idea of going to the gym. They like the idea of being an actor. They like the idea of having the long arc of a career in trading. There's a difference between wanting to do something and liking the idea of doing something. By the way, there's plenty of room in life to want to do things, to have this kind of daydreaming is the spice of life. I am in no way denigrating that. If I couldn't daydream, I would be miserable. But if there are things that I really, really, really want to do, not just like the idea of doing, but I really want to do, then I can't daydream. I have to take action. Those are the two differences. Okay. In my opinion, if you want to be a successful trader and are able to disentangle the difference between wanting something, that's action, and liking the idea of something, that's daydreaming, then your focus will be on the following 3 things and the following 3 things only. I am now talking about trading, not life, not going to the gym. You must have a process. Some people call it a plan. You must have patience with the plan and with yourself. We are not trying to be successful on Thursday or this week or this month. We're looking to change our lives. through the long arc of a career. And you must put in effort. And I have two things to say about effort. First, it's probably not going to be as easy as you want it to be. That's the bad news. I always finish with good news. The good news about effort is it's also probably going to be more satisfying than you think it will be. Because when you do things that are harder than you think they will be, and you're successful at it, they're more satisfying than you think they will be. In this case, I'm being very specific. I'm talking about being a successful trader. I'm not talking about doing 13 pull-ups. Okay. Unfortunately, I can't help with the one in yellow, with patience. Other than some personal views I have about life, which I won't share on this webinar because I'm going to go quickly. Okay? Either you are a patient man or woman, or you are not a patient man or woman. Know thyself. If you are not a patient man or woman, and you know that this takes patience, then you will have to work harder with your patience. You'll have to sit there and talk to yourself, maybe out loud. If you are a patient person, then this is a total triviality. You're lucky. One of the 3 bullet points is just like, yeah, I'm patient. Great. I am not a patient man. This was the hardest thing for me and continues to be the hardest thing for me. I'm a profitable trader. I have been for a long time. Still, I fail on patience. But I told you that you had a job. So what's your job? Your job is the effort. Remember, I told you that I finish on good news? We just made it easier. We also made it less expensive, and we also made it better. This is going to be more valuable effort. Now we can move on to the actual presentation. I did the preamble, 30 minutes. AI, what it is, why it matters, brief but meaningful. So what is this AI thing we do? We use AI to find when markets stop being a coin flip. So we measure probability and act when it shifts. I'm going to give you an example. This is one of the strategies, and I'm just going to shove it up early. If you were just to do a call spread, it's a 70-60 delta call spread, doesn't matter, a call spread in the QQQ. When I say the QQQ, I mean the actual ETF. And you had no model. You actually would have a 71% win rate. Why is that? Because markets tend to go up. But your average trade would be 1%, and that's with very little commissions. So that's probably a 0. You would be wasting your time. This is over 5 years. That's when there's no edge. Now, this is what I mean by we measure probability and act when it shifts. I'm taking the exact same strategy, literally, the same call spread. I'm adding nothing to it, but I'm only acting when probability shifts. This is what happens. The same trade, the same deltas, the same strikes, the same days to expiration. When we only act when the probability shifts, that would be a 5 in the model, the win rate goes from 71% to 88%. The statistical significance here is more than 99.999%. The average trade goes from you're just burning commissions to a 26% return on average over 5 days. This is what I mean. We measure probability and act when it shifts. Okay, but what do we not do? That's what we do. What do we not do? We do not make guarantees. We use AI to find when markets stop being a coin flip, and we measure probability and act when it shifts. I cannot promise you the success we had 2 years ago, now with a super-powered model, will do as well or better. What I can do is show you what has happened across 5 strategies. Average returns are up, win rates are up, statistical significance is verified, it's not luck. Here we go, almost done. 5 new strategies with AI and a brand new app. The brand new app is OptionSignal. OptionSignal is a tab and trade machine. It may be a mobile app sometime soon. The goal, as always, is to step up the trade machine offering to break further away from the noise. Ready? I'm going to show you this. 4 strategies for the SPY and QQQ, bear and bull. And then 1 strategy for the components of the NASDAQ 100. While we put the AI on top of it. It will be a bullish spread, bullish call spread. I actually just showed you that one. That's called being long vol. That's what I just showed you, right? Short vol, this is a trade that's for being not bearish. You're not bullish. If you're bullish, you would do the top one. You're not bearish. It's a short put spread with the neural network. This is what happens. This is the SPY over 5 years. The 60% win rate goes to an 82% win rate. The average return goes from a loss to a 19% win in 4 days. And again, all we're doing, I'm not adding something to the model. We're acting when the probabilities shift in our favor. That's it. It's the same strategy. I'm just plucking out the days that I'm not trading. Bearish trades. How long have you guys been asking for that? It's a calendar put spread with a neural network. This is what happened. Over 5 years, I kid you not, getting bearish, the SPY, over the last 5 years, your win rate is 44%. You lose most of the time. Why is that, guys? Because most weeks are down. Sorry, most weeks are up. So if you're betting to go down, you're going to lose. The average return is surprisingly only negative 0.4%. You only went bankrupt, but you went bankrupt slowly. So you lost 0.04% like 300 times. So you did eventually go bankrupt, but it was really, really slow. So you enjoyed the ride. With this AI, where we take the same trade, we've done nothing to the trade. We simply act when the probabilities have shifted in our favor. The win rate goes from 44% to 67%. The average 4-day return or 5-day return goes from a loss to 34%. That is stronger than the bullish strategy. We also have a not bullish short vol strategy. So you'll notice it's long vol, short vol, long vol, short vol. Okay? It's a short call spread. This is when you're not very bullish. You're not bearish, but you're not very bullish. Over 5 years in the SPY, you go from a 55% win rate to a 78% win rate, and the average return goes from negative 3%, which was the worst of all of them, to positive 14%. And if you're saying, well, the other ones are better than that, why do I need that? You need it. I will show you why specifically. You need it because this will not work in the option trading world without a portfolio of trades. I will show you why exactly. This strategy, which is like, no, I mean, that's good, but I mean, it's not as good as the other ones. The whole thing falls apart if you don't have all 5. This is 4 of them. And I will show you why. I won't bury the lead. Markets move in regimes. You've heard people say that a lot. The market moves in regimes. What was the regime in April of 2025? Well, as a bear market. What was the regime from about mid-May through September? Well, as a ripping bull market. The market moves in regimes. Let the AI show you when the probabilities shift in your favor for a bullish trade or a bearish trade or a long volatility trade or a short volatility trade. And finally, when you want to get situationally bullish, getting long the theta paradigm. Those are big words. I'm going to make a new slide, put it at the top, show you what I mean. And I'm going to start showing you, oh, okay, I'll talk about that one later. I'm going to give you the details about number 5. Let me get through these other 4. But when I can't just say theta paradigm and let it go and be like, ta-da. Okay, here we go. Results. The call spread with the neural network versus the call spread without the neural network. Ready? Very, very simple strategy. When the option signal is 5, get long. When the option signal goes to 1, close it. Or if there's a 50% gain. Pretty easy. Okay, no AI. You've seen this? 1% average return. This is the SPY. 1% average return. Actually, I showed you the QQQs. This is SPY. 1% average return. 70% win rate. Seems pretty good. When you only act when probabilities are in your favor, the 70% win rate goes to 86% win rate. The 1% return turns into a 23% return. That's over 4 days. Over 5 years. Statistical significance, 99.96%. 3 years, same stuff. Notice how consistent the strategy does without AI and how consistent the strategy does with AI. Another 70% win rate, that's over 3 years. A 2% average return. With AI, an 88% win rate. A 27% average return. Statistical significance, 99.8%. Over 2 years. 74% win rate goes to 86% win rate. Average return goes from 12% to 23%. Over the last year, 64%, goes to 82% win rate. A break-even trade turns into a 20% winner. Look at the consistency, right? This trade with AI, 88 to 82% win rate. Without AI, 64 to 70% win rate. All very, very, very consistent. Okay, I'm going to do it for the QQQ, and then I'm going to start going faster for the other ones. This is the Qs. That was SPY. QQQ. This is the example I sent you. 88% win rate from a 71% win rate, 26% average return in 4 days or 5 days, 21% average return. Over 3 years, 90% win rate, 32% return versus 3% return. Look how consistent the win rates are for both no AI and with AI. These are very stable strategies. Win rate rises to 91% over the last 2 years, 31% in about 4 days. And over the last year, 27% versus 1%, 88% win rate. The win rates, well, they go between 88 and 91 on this strategy. When you're with AI and when you're without AI, they go between 79 and 72. Very, very small ranges. It's all very consistent. This is what happens when you only act when the market probabilities tilt in your favor. And that's why I showed you the video. There are some great products out there for traders, and there is no place in the world other than Trade Machine for this AI. I said that last time, and now I'm introducing a new AI. And if you're wondering if I layer the AIs, of course I do. That's coming. I'm going to send the slides out. I just put it all on one page. Don't look at the numbers. It's exactly what I just showed you. The short put spread. Here are the rules. Option signals of 5, open it. Option signals of 1, close it. Or if there's a stop or limit, or if it's been 4 days. And when I say 4 days, those are trading days, not those don't include holidays. I'm going to start going a little faster with the numbers so we can get to the cool stuff in the presentation. Okay, SPY over the last 5 years, 19% versus negative 1%. Statistical significance on the win rate, 99.999%. QQQ, about the same. Qs have had a little bit of a harder time with this trade, so negative 5% without the strategy. Without the AI, 16% with the AI. If you look at the spread between with AI and without is 20% for SPY. It's 21% for QQQ. Okay, here's 3 years. You're looking at returns of basically 0 versus returns of basically 25%. And win rates in the 79 to 88% range with statistical significance over 99%. 2 years, thing of beauty, and 1 year, a thing of beauty. These trades started losing over the last year, not with AI. Look at the consistency of the returns and the win rates for the reds and the greens. Strategy number 3. It's a calendar put spread. So most complicated strategy we have, don't shy away from it. Pretty simple rule. Option signals 1, that's bearish, get in. Option signal goes to 5, get out. That's it. This is what it is. You're owning an at-the-money put that has 14 days to expiration, and you are selling, you're getting short, an out-of-the-money put that has 7 days to expiration. Simple enough. Over 5 years, this is a bearish strategy. You tell me. Have you seen this somewhere before, other than three slides ago? No, you have not. No, you have not. And that's what there is in the QQQ, even better. A trade which very slowly, with a 44% or 45% win rate, makes you bankrupt over 5 years. You keep losing like 0.5% a trade several times a week, a month, a year, until you're bankrupt. Instead, in 5 days, averages 34 or 37%. Statistical significance through the roof. 3 years, same thing. The trade is negative without AI, extremely positive with AI. Statistical significance through the roof. Same thing for 2 years, same thing for 1 year. Or is it the same thing for 2 years? I claim it is not the same thing for 2 years. Do you remember when I told you when we were talking about that short credit spread? I said, don't poo-poo something that on average isn't as good as the rest, and this is why. If you look really closely at 3 years, and then you look at 2 years, okay, the red is the same. The win rates are the same. The return is negative 1%. But look at the green. We went from a 31% average return to like a 14 and 11% average return. Well, that means 2 years ago, aka 2024, sucked. So in 2024, this one strategy of the five didn't work great. It was for 1 year. Remember the slide I had? This is a cutout of it. What does this AI thing do? We use AI to find when markets stop being a coin flip. We measure probability and act when it shifts. We do not make guarantees. You need a in my opinion, you need a portfolio of trades. So when one of these guys starts performing so-so, let's say, I don't know, kind of like the red, like, not making that much. You have other strategies, which are either long vol or short vol, which are doing well. Because this is how the long arc of a career works. It does not work on one trade. It does not work because you buy a call. It doesn't. Sorry. For those of you who don't know, I'm a former market maker on the NYC ARC exchange, and I'm a former hedge fund manager. That's the only reason they invited me at CFA. Yes, I was the first one to do AI in large scale finance, but nobody cares if you do that as and you're not a practitioner. I was a hedge fund manager. That model sold to Morgan Stanley. Now all of a sudden they wanted me at CFA. I'm telling you, you're not going to win with just one strategy, in my opinion, without giving advice, without soliciting a trade. I'm pointing this out on purpose. This is what probabilities look like. In general, awesome, but it's probabilities. Can you flip a coin and get heads 4 times in a row when you're trying to get a tails? You can. This is why there are 5 strategies. And this is why I said this. I'm not here to promise you shit. I'm here to tell you that we have a model which, at least in the past, finds when markets stop being a coin flip and the probabilities move in your favor, and that's when we act. It's still probabilities. Number 4, it's a short call spread. Pretty easy. Get in. Short call spread is a not bullish. The signal's a 1. Get out when it's a 5. Gain limit stop and limit. Here are the results. I'm going to go quickly. They all look great. In this strategy, what I really like about it is we're looking at like 90% win rates. I want to be clear. Look what happened in year two in this little time frame. When the other strategy wasn't working, this was working its best. 18% is the best number we have here. Right? So that's why this strategy exists. It works when the other one isn't. It's probabilities. Last one. Now I owe you a little bit of an explanation because I use something called theta paradigm, which is not a standard language for option traders. It's something that I made up. I didn't make up the reality. I just gave it a name and the name stuck. For me, didn't stick for anyone else. It's not like I'm not famous. It's nothing. Okay, first of all, I want to tell you what the signal is. We could not layer the AI that we introduced in 2023 that has done so well on the indices. And we cannot, and you can watch those videos or those webinars to understand why. But in general, it's because we use a lot of their return distribution characteristics to help measure the return distribution characteristics of stocks. So that skew and kurtosis doesn't work on the QQQ and SPY. In other words, there's no number to compute. But now there is when we're doing individual stocks. And of course, we're going to use it. This is the AI we used for the webinars 2 years ago that have performed so well. Right? That. Of course, we're going to use that AI too. We will extract all the edge we can and be unrelenting in that pursuit for our option trading. We will try our best to leave nothing on the table. If we think we have an edge, we want to use it. So here it comes back. Ready? Before I do, you're going to say, what is the strategy? Fair enough. We discovered something in 2016 that there's this kind of pre-earnings momentum in tech stocks. So here's the earnings event. There tends to be buying in the stock before the event in anticipation of a good report. So this isn't an earnings bet at all. It's just right before the earnings event and those 14 days before. That's what we're doing. Okay? Not an earnings bet. It's this pre-earnings optimism. And then I have something called the theta paradigm. You're like, what the hell is the theta paradigm? Okay, I want to show you two charts. First of all, this is what a normal 7-day option looks like when it comes to time to decay. It becomes exponential. It's not a straight line, right? It does this. So if you own an option and it's a weekly option and you're owning it past day 3, you are getting smashed in the face by losing time value. But there's a little trick. If earnings occur inside the 7 days of that expiration, in this picture, earnings are on day 6 of a 7-day option, then this time decay actually looks like this. So the time decay up until day 7, up until day 6, instead of losing all this all the way down here, you only lose this. And the second, as you guys know, anyone who's traded options, the second earnings come, boom, vol crush. So this strategy is making value of this. It's owning the options which have an earnings event inside them. So we minimize the theta decay. We minimize the time value destruction. I call it the theta paradigm. Doesn't matter. So we're making use of this reality, this earnings momentum, while making sure we don't just own vol and eat theta in the face. This is what I call the theta paradigm. Okay, now I'm going to show you the results of the strategy, both with the neural network and then with the neural network and the prior AI from 2023 put on top of it. Okay, so if you just got long a 14, okay, here, so get long when signal's 5, make sure that kurtosis, that's our AI, is greater than 0. So our second AI, the first one. It's 14 days before earnings. You close when either there's a 1, right? Or 1 day before earnings, or you hit a 70% gain or a 70% loss, or after 5 days of trading. Okay? And at no time do you eat this decay. You're always before. Okay, so if we just use the neural network, the signal 5, we get a lot better results. We go from 6% to 16%, like 2.5 times the results. This is over 5 years. But if we use the other AI also, our win rate goes up, our average return goes up. This is double AI. We'll extract all the edge we can from the market. 94.7% statistical significance. The reason this number is so small is because there's so few trades. Over 3 years, if you just did it with no strategy, you'd make 7% a trade. 46% win rate again. Notice how consistent those are. Notice how consistent the win rate is here. Notice how consistent the returns are here, right? There's no magic here. This is actually what it looks like when you start getting edge. And you make 19% when you add on the second AI, right? Another 2% spread. Over 2 years, it becomes gigantic. Using the second AI has been gigantic over the last 2 years. Remember 2024 was bad for that one strategy? That short, I think it was the short put. When you're using all 5 strategies, one of the other strategies isn't doing as well, but another one starts outperforming massively, right? The outperformance here is more than 2 to 1. And then over the last year, ta-da, average return is 15%, average return is 52% with no AI. With AI, you're getting to almost a 70%, double AI, you're getting to almost a 70% win rate and a 43% trade in at most 5 days. 43% in at most 5 days. Right when the other strategies stopped working as well, this one did, as did the other one, the short credit spread. Or sorry, the short call spread. This is why you have a portfolio. So in 2024 and 2025, this strategy worked the best. This is what probabilities look like. This is why there are 5 strategies. Your long vol, your short vol, you're bullish, you're bearish, you're not bullish and not bearish, and you use the theta paradigm. Situationally bullish. So what is this AI thing we do? We use AI to find when markets stop being a coin flip. We measure probability and act when it shifts. We do not make guarantees. A successful trader over the arc of a career, in my opinion, exercising my First Amendment right without giving advice and not soliciting a trade, is that you must have a portfolio of trades. What I have shown you, I believe suffices. This is why there are 5 strategies. That's it, guys. Now I'm going to show it to you in the platform, and we're going to be done. Okay? Here we go. This is Trade Machine. I will log in. This is the OptionSignal tab. So now I'm talking to people. No one has seen the OptionSignal tab. So I'm talking to everyone. So I'm talking to both Trade Machine members and people who are not Trade Machine members who want to know what this thing looks like. This is what it looks like. Remember? This is an intraday chart. You can do minute bars, 3 days, blah, 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 all you want. Okay. This right now it's locked in SPY. Next week, you're going to be able to look at any symbol. This is what it will look like once it's been determined. But at 3:30, you will see these things going where you're like, okay, now I know how close I am to a one or a five. And in some days it'll be like a three, and there's almost no way for it to get to a one or a five. So you're like, okay, cool. Today I'm not trading. Today it's just not going to hit. Below it are the strategies. Like the SPY. Oh, it'll be green when is active. Like this call spread. 43 wins, 7 losses, 1,500% return, which on average is 24% a trade for a maximum of 7 days, right? 7 days to expiration. That's what it looks like. Or you're curious about some of the bearish ones? The index long put calendar. Let's do QQQ. This is over the last 2 years, 21 wins, 14 losses, an average 774% return over 35 trades. So that's about 20% a trade. You want to see it over 3 years? Sure, see it over 3 years. See it over 5 years. All right. This is the OptionSignal tab. This is it, guys. I'm now going to go much further with Trade Machine, but if you are interested in just the simplicity and the power of the new AI, there are 5 strategies. They all show up here every day. When stocks are 14 days before earnings and these signals start happening, you will see all of the tickers here. This could be a very long list of tickers. This is a long call spread. This is a long put spread. It's a calendar spread. This is a short call spread. This is a short put spread. So long vol, short vol, situationally bullish. Theta paradigm. This is OptionSignal. Whether you own Trade Machine and you get it, this is what it will look like. If you don't want Trade Machine and you just want it, this is what it will look like. With one caveat. If you get OptionSignal today and you're not a Trade Machine member, we're going to give you Platinum Trade Machine for a month. I'm going to talk about that later, but you're just going to get it because I think you should at least know what you're looking at. And don't worry, you won't have to cancel. It's when I say you'll get it for 30 days, I mean if you don't cancel, it just goes away. It's not one of those like air quotes, I'm giving you a trial for 30 days and like, oops, you forgot, we got your money. No, you don't have to cancel. It'll just go away. Now, how do we use this if we're Trade Machine members? Well, we'll definitely use the OptionSignal page, but we get to be way more powerful. Here is the short call spread. I want to go with a long call spread. It interests me more. Okay, here is the long call spread over 3 years. Your Trade Machine member. How do you do this? Okay, Trade Machine members, you go to Technical Open. It's the first technical in the drop-down menu, OptionSignal. Tell me when it's a 5. That's it. You can say greater than, less than, whatever you want. You put any number you want in here. Tell me when it's a 5. Give me a strategy. Now, and you can do that for all the strategies. That's any strategy you like in Trade Machine. Add this on top of it. Now, do you remember when I told you at the very beginning of the webinar that some people will find have found Trade Machine very difficult, and it's hard to know how to decide between hundreds of possibilities. But I started by saying that for many users, it's been a game changer. Trade Machine has, and it's turned their option trading into something profitable, but not only profitable, repeatably profitable. And it's a product they could never live without. But I said, but there's an OptionSignal tab, so why do I need Trade Machine? I'm going to give you an example of why, I don't know, I might want Trade Machine too. What if I did, I don't know, this trade? I'll start with this trade. over 3 years. And I was like, I don't know, like, how does it do with the Mag 7? You cannot do this in option if you only have the option signal tab. This is the backtest tab. Could I interest anyone in 40 wins and 8 losses in Microsoft? Or 40 wins and 7 losses in NVIDIA over the last 3 years? If I can, then you want Trade Machine. Because OptionSignal won't give you these names for this strategy. Let me show you something else that might interest you. I'm going to go to one of our saved back tests. It's already got one of our AIs in it. It's called spreading the sell-off. I can explain to you what spread the sell-off is. Let me just give you a little picture. People who don't know, just so you know what it does. I have to go into my images folder, which should have been up, but it's not. So work with me. Okay, here's what this strategy does just in theory. It's a strategy where the current stock price is this vertical line. It's a strategy which makes money if the stock goes up, strategy which makes the most money if the stock goes down a little, and it loses the most if the stock goes down a lot. The stock has to go down a lot, but it's a limited loss. Now, what if I wanted to spread the sell-off over the last 3 years, and I wanted to do it in the Mag 7? Pretty good. Pretty good. That's the last 2 years. Amazing. 13 and 2. This is with only one AI. I'm going to do this. I'm put a little squiggle here so you guys know I'm not messing with the numbers, right? That's my little, that's proof that when I bring this back, I wasn't messing with the numbers. Move it over. What if I said, wait a second. They have this new option signal thing, and it's a bullish trade. I only want to do it when it's a 5. Can I interest you in 8 and 1, an 89% win rate, and a 45% return? And you're like, well, I mean, that's awfully similar to 2 years. That's true. Let's try the last year. How about 5 and 0? Happened 5 times in the last year, right? It's about once every, 2 months? 55% return on average in a trade that lasts about 10 days. And what if I didn't have the option signal on there? 5 and 0, 55%. 7 and 0, 55%. Like, wow, this strategy works well all the time. I don't need the other AI. Is that true? What if we went to 3 years? Okay. Actually, let's go to 5 years. All right. Here's how it did over 5 years. Little squiggle. I'm not making it up. Let me add the option signal. A little bit of a bug in Trade Machine where I have to put one instead of the other. Okay. Oh. So when we give it more time, more chance for the probabilities to work out, we go from an 89% win rate, which is amazing, to a 94% win rate and a 33% or 38% return to a 46% return. If you have a trade machine with option signal, you can do this on every single strategy you've ever done or planned or alerted in your life. You can just add that to it. So I'm going to get out of the product because I think it's fairly self-explanatory. If you just want this, you will just get this, and you will get 5 awesome, fully diversified portfolio of trades, which should signal one of them, a bullish or bearish one, should signal once or should trigger, I don't know, once or twice a week. There will be weeks where it doesn't signal. You just deal with it. That's how probabilities go. And then you'll have a week where there's 5 trades, five days. Let me go back to the slideshow. That was in the platform. This is the portfolio. In 5 years, across all strategies, there were 779 trades. 310 were in the SPY and 310 were in QQQ, because when the SPY triggers, so does the QQQ. 160 were in individual stocks. So on average, 5 trades per month in an ETF and maybe 2.5 trades per month. So let's say a trade every other week in a tech stock. One thing, we excluded in-sample data in Trade Machine. If you don't know what in-sample means, it means when you build a model, you give the machine, you give the AI kind of some answers. You're like, here's what happens with this data, and here's the answers. And the model says, oh, okay, let me learn the patterns, blah, 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 learns the patterns. Then it creates predictions for that sample. That's useless. Nobody gets the predictions and the answers. What you actually do is you take what it learned and you apply it to the rest. I'm simplifying for those of you who like cross-validation and add a sample. We did both, doesn't matter. The rest. So we're not going to put the in sample in Trade Machine because it will make the results look too good. It's nonsense. It's for all AI models. In sample doesn't make sense. So why does it matter to you? It means on average, you can expect about twice as many trades as you see in Trade Machine over a period of time because we've actually taken half of them out. Make sense? So you should be trading every week, at least a couple times. Will there be weeks where you won't? Yes, it clusters. Remember, it clusters, it clusters, it clusters. Sometimes you won't. So you've seen a lot. Hopefully, you've learned at least a little. Hopefully, more than a little. This was the agenda. How do you get OptionSignal? First, one more thing you should know. We have OptionSignal now based on a market measure of probability. But that's just the market. That's just the indices. We will be adding more packages to OptionSignal. What's a package? I don't know. How about a package of strategies specifically for the Mag 7, for example? Their own group. NVIDIA, Tesla, Apple, Alphabet, Meta, Microsoft, and the one I'm forgetting, Amazon. Right? Or we'll add a package just for financial stocks. Or we'll add a package for just semiconductor stocks. Or we'll add a package for just industrial stocks. Those will be a la carte. We won't make it more complicated by putting them in there. If you want them, you can just buy them like a menu. Buy what you want, don't buy what you don't want. What's an OptionSignal now is in it. You don't have to that you're getting those 5 strategies. And I actually believe those 5 strategies could be enough. One thing about people that sign up today, you will get our first a la carte package for free. The a la carte packages could be several $100s. You'll get the first one for free. Now, just so you know, I don't have an a la carte package yet, so I can't tell you what it's going to be. I'm thinking it'll be the Mag 7, but I don't know. I can't manifest signal. I can try to create some AI for the Mag 7. I might look at it and be like, yeah, I wouldn't trade it. And if I wouldn't trade it, then it's not good enough. Okay. But I know that there will be some signals somewhere. So everyone that signs up from this webinar will get the first a la carte package for free whenever it comes. Okay, it's not now. We just built this giant thing. So you will get a new neural network built specifically for small groups of stocks. Okay. And if you don't want the first one we make, you're like, yeah, that you did it for financials. I don't like financials. No problem. We won't give that one to you. You let us know which a la carte package you want as we start releasing them. You have a free coupon. You get an a la carte package for free. Free coupon. You choose. Okay. How do you get OptionSignal? There will be Q&A after this, but let me do this first. If you are not a current Trade Machine member, it is $699 for the year, and you will get all of Trade Machine for 30 days for free. It's actually Trade Machine Platinum for free. And again, when I say for free, what I don't mean that in 30 days, if you don't cancel, we also charge you for Trade Machine. No. I mean literally for free. If you forget you have Trade Machine, it's fine. It just goes away. We'll send you an email, which is, hey, do you want Trade Machine? If you don't answer, it goes to spam. You don't feel like talking to us. The trade machine part just goes away. Why am I adding it? I'm adding it. I'll show you in a second. Not just what I showed you, but one more thing. I think you're going to want to use it. But if you don't, that's fine. If you're a current Trade Machine member, not a Platinum member, it's also $6.99 a year, but you have Trade Machine, so you're awesome, and we upgrade you to Platinum for a month for free. Okay? If you are a Platinum member, then it's $4.99 a year. That's it. And if you are a Trade Machine Platinum member, and you decide, I don't know, let's say your annual renewal is in 3 months, and you're like, man, this OptionSignal thing's so cool. I don't want my Platinum anymore. Just let your Platinum go. You'll get OptionSignal. We'll honor the $4.99 per year price for that first year, even if we're not going to prorate it back. Okay, the next year when your renewal comes, we'll tell you, hey, if you're not a Platinum member at $6.99, but you will get this price. We're not going to raise the price on you in the middle of your subscription. Everyone who signs up is going to get the first a la carte package for free, or any a la carte package you want. You get a free coupon. Maybe we'll build 6 of them, and the 5th one really strikes your fancy. Like, I want that one. Fine. This is how you do it. You go to trademachine.com/OS, as in OptionSignal -webinar. Let me show you one thing, because if you're a Trade Machine member, do not click purchase. You will blow up your account. So let me go to the page real quick and then answer questions. Okay? Don't go here yet. If you're a Trade Machine member, you can go here, but don't buy it. Okay. Show you this is important. Do not go yet if you're a Trade Machine member. This is what the page looks like. So you know you're on here's the video I showed you at the beginning. Blah blah blah. Reuters, Bloomberg, blah blah blah. Okay, if you are a Trade Machine member, go all the way to the bottom and click here. If you're already a Trade Machine, sorry, if you're pardon me, a Trade Machine Platinum subscriber. If you're a Platinum subscriber, add it here. You have to click this page. It's going to look like this. Okay? And you must use, you must use the same email for your Platinum account for this. Otherwise, it ain't going to work. And we're not going to honor the $4.99, and you're going to be like, what the hell? Same email. If you only want OptionSignal, this is non-Platinum members now. If you're not a Trade Machine member or you're a monthly Trade Machine member and you want to add OptionSignal, you do it right here. It's $6.99 a year or $58 a month. If you're not a Trade Machine member and you want both, or you're a monthly Trade Machine member and you're like, I'll take the discount, then you can go right here. Trade Machine Platinum plus OptionSignal. Okay? That's how you get it. The pages look like this. That's exactly, that's all it looks like. So, oops. So, where do you go if you're a Trade Machine Platinum member? You go to the bottom. Use your same email address. Okay, now I'm going to do live Q&A. Live Q&A. Reminding everyone the URL, everyone about the free a la carte package. But as always, before I do Q&A, we take a bathroom break. I will share the lovely sounds of the hold video, and I will be back usually in less than 2 minutes.